seen the average duration of a loan fall in New Zealand for housing from 22 months to less than 14, is that?
That's about right.
So that's a remarkable reduction in term rates, and it means that any borrowers at the minute are very sensitive to where the official cash rate is and where it may go and where our banks set their rates. So we think it's actually quite sensitive at the minute.
Have you been involved in any discussions with the government around the issue of enabling people to break their longer term mortgages?
No. Patrick.
Dr. Bollard, you talk about the move now being what you consider to be more stimulatory. I just wonder, how would you characterise more stimulatory in this environment?
Well, I mean, we're in a situation where we've got historically very stimulatory monetary policy. We've had stimulatory fiscal policy for a year. We've had tax cuts, and we've got a much lower exchange rate. And so the whole way that those three things come together for many businesses is to say that financial conditions have just eased quite a lot, provided they can get funds from the banking system. And that's why we've been focusing on that. But of course, if you get a general falling away in business and consumer confidence so that nobody wants to do anything, then you can have stimulatory conditions without stimulation. We don't believe that is the situation. We think that should be avoided. But clearly people are going to be very conservative at the minute, so they should. They'll be looking at, in some cases, reducing debt. There is a huge amount of uncertainty. We find it the world is finding it very difficult to forecast next year. Businesses find it difficult to do that, so they have to be cautious in that time. But what we've observed around the New Zealand system is that it's been working pretty well, given that very unpleasant international environment.
Just following up on that, according to the old Monetary Conditions Index, which some analysts still sort of keep an eye on just as a gauge to how stimulatory conditions are, we're actually not, that index is actually not lower than when it was during the Asian financial crisis, and yet this crisis would seem to be a much worse one than then. So why aren't conditions more relaxed?
I think we'd look a bit broader than that. That's only an exchange rate, interest rate combination. A financial conditions index would have other things in it as well. We are seeing much looser fiscal policy than at that time. And I think you'll find there's other features that do mean this is a more stimulatory sort of period. I don't know, John, if you have any more comments on that.
Yeah, and the Monetary Condition Index is a very specific tool. And it was so low through the Asian crisis largely because the currency itself was very weak, and that was where the stimulation was coming from. This time around, we're seeing fall in asset prices, including equities, including house prices, and so we have to take that into account as well.
Dr. Bollard, do you think there is a greater risk now of a depression than there was before December?
A world depression?
Yes.
Well, I mean, we think that what we're seeing now is worse than anything since World War II. We've felt that on the financial side for some time, but only recently reached that view on the economic side. But that is quite different from the Great Depression. Depression has got many different sorts of definitions, but the 1930s depression was a different sort of beast, and a very unpleasant one that was not only economically unpleasant, it was socially extremely unpleasant, and politically as well, and we don't think that's what we're seeing at all.
And you warned in December about domestic inflation. The CPI figures out a few weeks ago showed power prices are still rising 7%, council rates up over 6%. Has your view changed on that?
No, it hasn't. We notice building costs starting to come off a bit more convincingly now, but some of those other items are still holding up. The reason for us saying that will now be pretty obvious to some of the sectors that have been really taking advantage of positions even in a very flat economy. They've got to realise they're working in a very negative economy now, and so in that sense our comments apply just as much. Any other questions? Well, thank you very much, everybody. Despite our forecasts, we do wish you a happy new year and look forward to seeing you through the year. Thank you.
Prosperous one.
Sorry?
Prosperous one.
Happy covers different things for different people. I can't speak for your circumstances, Barry.